Welcome to the disclaimer section of the video. One thing I want you to know, this video is not financial advice, only a source of good information. All right, today in this video, we're going to talk about the wheel, covered calls and cash secured puts. No, not that wheel, not the 9-to-5 hamster wheel you're thinking about. We're going to do something a little bit different today, okay? We're going to actually talk about the wheel, covered calls and cash secure puts. And we're going to do it inside of the Robinhood app. You can use any particular broker, TD Ameritrade, Momo, whatever. All right, let's get into the video. Now, we're going to start off in the Robinhood app. That's what we're going to be using today. I hope you have two-factor identification to get into the app. All right. Now, this is going to be the covered call section. This is a triple leverage inverse ETF, SPXU. I do not recommend anybody getting this particular security unless they know what they're doing. This is not for newbies. Okay.
Come on.
Regardless of what particular security that you decide to go with, you're going to need to know how that particular stock or security moves. And what I mean by moves, what it looks like during a week, month, 3 months, or years. Okay? Because that, in effect, determines where you pick the particular strike price. Or I hope it does, because nobody wants to lose money. Now, to actually see how the particular security moves, once you're on this particular section, all you do is just simply click week. Then you could click the month, 3 months, the year, and 5 years. Hopefully you're starting to see why I actually picked this. And I'm doing a different play with this, okay? This is not something that I recommend you pick. I'm saying that again. What I'll do at the end of the video is I'm going to actually show you a couple securities that I do recommend, all right? Now, in order to run the covered call strategy, you want to select the trade button. After you actually look at it, you want to make sure all the information is where you want it to be, okay? I'm just looking over a few things here before I select the trade button. You click trade options, sell call, choose an actual strike price, which is going to be on the right. Now we're moving a little bit fast. Don't worry. I'm going to slow the next section down. You click 1, okay? I selected the actual $7. Let's just say you paid $6, okay? You want the actual price to be above what you paid for it. Now, read the actual bottom. It says you are agreeing to sell 100 shares of SPXU for $7 each on or before December 11th. If you're on asked to sell SPXU by then, you'll keep the collateral and accept full $7 credit. What that means is, okay, you're giving somebody the right to buy your 100 shares in a certain amount of time. If it doesn't reach that price in a certain amount of time, you get to keep the full $7 credit. Yes. Now, if you made a mistake, what you can do, go up under upcoming activity, select the upcoming activity, which is the $7. And then once it comes up, you either click replace or cancel. I'm going to click cancel because obviously I do not want to run that on that particular security, okay? Now we're going to do the other side of it, the other side of the wheel, the cash secured put. And just as we did last time, click trade options. At the top, we're going to slow it down a little bit. You're going to go sell put. Not sell call like we did on the first one. Sell put. Then what you want to do is select a put price that is below what you paid for it in the beginning. Let's look at the $5.50. Obviously, you're making it lower than what you actually purchased it at. Because if you are assigned those particular shares, you want it to be at a lesser price, so you're always making profit. One contract, which represents 100 shares that you could particularly you may or may not be assigned if it reaches that price. Minimum credit, $1, so that's what you'll receive. And it's different if you choose some of the securities that I'll actually recommend towards the end. The credits will be much higher. The premiums are going to be much higher. Now we clicked review, and it simply says not enough collateral because I did not put SPXU on the wheel. The collateral will actually be the cash that you made as a profit if somebody bought your shares, but we did not do that, okay? Just looking over the information. Yes, I definitely do not want to run that on this particular security. I'm looking for a different play. Now, some securities that I do recommend that you use this covered call and cash secured put strategy on is Bank of America, US Bank Corp, and Kroger's. I'm going to paraphrase a few things that I have up here. Okay? You want them to have a dividend yield of 3 to 4%. Okay? Because you're going to be holding this long term. All right? The company that you actually select must have been around for at least 10 years. You don't want a fly-by-night company. All right? And you want it to be trading sideways. Okay? The company needs to have an average ROE of at least 20%. That's the return on equity or the return on your investment. All right? The company should not have too much debt. That's another thing you got to watch out for. Also, you need to make sure that you can make at least 1% by using the wheel strategy on this particular security. All right? That is the end of the video. I just gave you some free game. Some game that'll get you off that 9 to 5 hamster wheel. If you have gotten anything of value, like, share, and subscribe. And we're gonna go over the next video, and I'm gonna show you something totally different. So make sure you hit that notification bell so you can be informed when I drop another video. I'll catch you on the next one.